Okay, hi, welcome to my YouTube chain, StockInvesting360. So, I'm going to provide every now and then, hopefully monthly, a stock pick, a stock review for those who are interested in investing in companies that can provide some growth in the future. So my intended audience is actually investors that are looking to invest long term. I'm not necessarily providing information to short sellers or to people that are using technical analysis and are day traders. So I'm mostly into fundamentals. So basically, my investing criteria for those who have been visiting my website, StockInvesting360.com. I normally look for stocks that are profitable, that have a strong balance sheet. So I'm not too much interested in companies that are financially in trouble. And that's why I want to make sure they can last for a while, many years, because I want to invest in them on the long run. I also look at valuation and growth potential, and I also consider the opinion of analysts because I believe that they are providing a lot of information that can be useful and that can help small investors like us to make some good picks. So this month's stock pick is Nutrisystem Inc. So ticker is NTRY. We see here. So basically, we'll first start to look at the company's profile. So basically, Nutrisystem Inc. has a market cap of $1.5 billion. So it's not a small company, but it's not a very huge one. It's headquartered in Pennsylvania, in the USA, and it's trading on the Nasdaq. And in a nutshell, the type of products and services that it supplies, it provides weight management products and services to clients. So it's not necessarily a defensive stock. Obviously, if there's a downturn in the economy, it's possible. It's more than possible. It's going to be probable to see that revenues would be affected. So people would probably not spend their hard-earned cash on weight management products during rough times, even though some people will. So, but right now, when we will look at the fundamentals for the last 5 years, the company is making some nice profits. So, we'll talk in a couple of slides from now. We'll talk about the valuation of the stock, the price to earning ratio, and we'll also talk about price targets and growth estimates. So let's first look at first criteria, profitability. So I like to invest in stocks that are making money, and I want to look at are they increasing? Is the company increasing its revenue year after year, and is it increasing to its net income, its profits? So when I look at the last 5 years worth of annual report, we can see that the revenues of Nutrisystem went from $397 million, because the numbers here are in millions of dollars American USD. So in 2012, it reported total revenues for 2012, year 2012, of $397 million. Then we can see that revenues fell a little bit in 2013, and then it went up and up and up to $545 million for the fiscal year 2016. So if we look at, basically, that's 5 years worth of financial statements, but between 2012 and 2016, we had 4 years worth of operation. So if we calculate the growth average per year to go from 397 to 545 in 4 years, we have a revenue growth of 8.2% per year. So that's not too bad. There's a trend here that is interesting for investors, and here, today, that's more of an estimate. So obviously, it looked like in 2017 the company will beat its 2016 numbers, but I like to look at historical numbers to look at profitability and how much revenues and profits have been going up or down, or have they been stable. So we'll look at basically numbers that have been officially published. When we look at net income, so the company lost some money here in 2012, and then it went on the green side, so profit of 7 million, then 19 million in 2014, 26 million in 2015, $35 million of profit in 2016. So to be able to calculate its net profit growth, I normally, basically I've used the last 4 years worth of annual reporting. Uh, it's difficult to include losses in the calculation to make some kind of sense. So what I've used is basically in three years, 1, 2, 3, we went from $7 million profit to $35 million. So it's a profit growth of 70% per year. So can they keep it up? When we look at potential estimate for 2017 of 56 million, there's a nice increase here that could be interesting for investors that want to invest long term on Nutrisystem. So in terms of profitability, we can agree that the last 4 years have been profitable, and there's a positive trend here that is more than interesting for growth investors such as me and probably most of you. Then let's look at its balance sheet. In terms of balance sheet, it's nice to look at past historical annual reports. It's always good to concentrate on the latest one, 2016. So sorry about the screenshot here. The years are not shown, but this is 2016 and this is 2012. So basically, the current ratio to see if a company is in a position to pay for its current liabilities. So does it has enough cash and equivalent to pay for the liabilities that need to be repaid in the next year? So basically, we divide total current assets. Sorry about the word. $101 million worth of current assets. We divide it by the total current liabilities of 58 millions. So there's quite a lot more. There's 74% more current assets than current liabilities. So we could say that Nutrisystem is in good financial shape. And we also I like to look at stockholders' equity, how it's growing during the years. So it went from $60 million worth of stockholders' equity, so book value, to $95 million in 2016. So in 4 years, stockholders equity has grown 4.3%. It's not too much, not that much, but at least the company is creating value to its shareholders. So in terms of balance sheet, I'm comfortable with Nutrisystem's balance sheet right now. Now let's look at valuation and growth. So basically, the company's price to earning is set as at 32.56. So the stock is selling at $52.55 as of December 6, 2017, and its earnings per share at 1.61. So if we divide 52.55 by 1.61, we end up at about 32.6. So it means that you're paying 32.6 times the profit for each share you want to buy. So it's a bit high compared to the average of the stocks on the stock markets. It's value investors will try to look at price to earnings around 20, maybe a little less. In that case, we're paying a little bit more, obviously, but there's also the growth that comes along with it. So the growth estimates, and that's provided by analysts for the next 5 years, is around 17.5% per year. So here for Nutrisystem, ticker NTRI, the average estimates from the analyst is a growth of 17.5, and we can see that the last 5 years it grew by 42.2. So that's interesting. So basically, are we paying too much for the earnings? If we just look at price to earnings, we're paying a premium, but the premium is dictated by the fact that we're expecting an interesting growth of 17.5. Obviously, some companies may provide a better growth rate, but 17.5 for me, I'm trying to always be over 10, 15. So 17.5 seems reasonable to me. So when we divide the price to earnings by the growth, we end up with a PEG ratio of 1.86. The lower the better, but under 2, it's not something that I would turn my eyes away from. It's an interesting investing option. So that's for the valuation and growth. It's a nice growth stock, but it's not necessarily a pick that could be interesting for value investors. They may feel like they're paying a bit too much for the current profits that the company is generating for each share. Finally, I always like to look at Analyst Opinion because they do provide a lot of interesting information, useful information, and they also have an impact on the overall sentiment of investors and markets towards companies. So when analysts are positive about a stock, it normally means that you can expect some good performance in the years to come. So in the case of Nutrisystem Inc., if we look at the recommendation, so there's a total of 8 analysts following the stock. 5 of them have a strong buy rating, which is very good. 3 of them has a buy rating. So basically, all 8 of them are recommending a buy or better. So that's obviously something that I like to look for, and it has a recommendation rating of 1.4. So that's, for me, that's good. The growth rate estimate for the next 5 years. So because I want to invest in a stock for the long term, so 5 years is it's probably not worth trying to look at 10 years because it's impossible to predict the future. Even estimate for the next 5 years, obviously there's a lot of assumptions in there, but that's the type of information that analysts will provide. So they provide a growth rate for the next 5 years of 17.5% per year average, and we've used it in the previous slide. So that's interesting for me. And the average price target from these 8 analysts is $73, and the stock is currently selling at $52.55. So there's potentially a 39% upside in the next 12 months. If the company obviously meets the expectation, and that quarterly financial results are good, a price target of $73 in 1 year would provide a 39% upside, which is interesting, obviously. And if we look at revenues estimate, so if we look at 2017, an estimate of growth of sales of 27.30%, and then 40% for next year. So there's a tendency here to say that the company should continue to grow its sales, and that should have an impact on its profit. So obviously this video is not a recommendation to sell or buy shares of this company. I'm not a financial analyst or a financial advisor. I own shares of Nutrisystem, and I think it's a good investment for me. So investors or viewers that may want to invest in this company should first conduct their own analysis to see if it's a good investment for them. I took information from various websites, financial websites, most notably Yahoo Finance and Morningstar. So I hope that this video will be useful to the viewers, and I hope to see you again for other stock picks and stock reviews. Thank you very much. You can visit me at www.stockinvesting360.com. We provide modules on how to invest on stock markets, and also members can have a look at Stock Investing 360's portfolio. So we provide monthly updates, new stocks that will be included in the portfolio, and overview of the performance of my portfolio against stock market indexes in the United States and in Canada. So I wish you all a good day. Bye.